Welcome back, everybody, for my portfolio update for October 2025. Now, earnings season is once again causing big swings in our portfolio, and at least so far, the market's overall uptrend has continued. And as good as my performance has been over the last 2 years or so, I actually decided to trim a little bit in October, and we're going to get into all that a little bit later, so let's see how I did for the month. Now, we're back in Snowball Analytics, and as of November 2nd, my account is currently at $504,042 and some change, so we reached the $500,000 milestone. Now, if we take a look at the actual breakdown, I've adjusted this to see how we did for October only, and we see that my account value was up $38,441 for the month in terms of dollar value. And if we look at just performance only, we see the performance was up $37,641. So again, that means I had my normal $800 contribution that went into my account, but the rest of it was mostly gains. And I mean, look, $37,000 in gains in a given month. I went back and looked. I think it's the third highest that I've ever had in my portfolio. So, again, we've just been on an insane run, and yeah, it's been pretty cool. Now, if we look at the breakdown, we see that it was mostly capital gains of $28,075 with some realized P&L of $9,396 since I trimmed at the end of the month, which again, we're going to talk more about later. And then of course, dividends of $168. And as you can see for October, we kind of hung around for most of the month and then just shot up towards the end in a big way. But let's go ahead and see how it did against the S&P 500 and the Nasdaq 100. Now, for the month, my portfolio was up just over 8%, with the S&P 500 up 2.65%, again, accounting for the timing of my own buys and sells, and the Nasdaq was up 4.89%. So we crushed both the S&P and the Nasdaq this month, up over 5 percentage points on the S&P and over 3 percentage points on the Nasdaq 100. Now, if we take a look at where we stand year to date, we see that my portfolio was up 40.7%, with the S&P 500 now up 17.45%, and the Nasdaq up 23.34%, again, based on the timing of my own buys and sells. So we're still more than doubling the S&P, and we're not quite doubling the Nasdaq 100, but pretty close. And I mean, again, there's nothing more to say other than it's been a really great year. Now, if we take a look at the performance of my portfolio since I started it on December 8th, 2022, we see that my portfolio is up over 101%, meaning that we've doubled in just about 3 years, with the S&P 500 up just over 70% and the Nasdaq 100 up over 111%. So since inception, we're outpacing the S&P by over 30 percentage points, but still trailing the Nasdaq by about 10 percentage points. But at least we're starting to make up a little ground again. And we talked about it last month, but that first year in 2023 really was a difference maker between, just severely underperforming the Nasdaq 100 in that year, and that's what's continued to hold us back. Because if we just take a look at how we're doing since that January 1st, 2024, when we started making changes, my portfolio is up over 84%, with the S&P up over 44% and the Nasdaq 100 up about 53%. So that's what I mean about the last 2 years really being an amazing run. And again, it's not something that you necessarily can project out into the future like it's always going to be like that. But look, the decisions that we've made over the past 2 years have really paid off in a big way, and it's fun to see when that happens. Now, one thing I haven't showed in the past is my time-weighted return. Now, normally what I show in these videos is my money-weighted return, and I might be a little different than some people because some people say, the time-weighted return is your true return. I feel slightly different about that. I think money weighted is the actual difference that you got in your actual account. But the reason why people use time weighted is because it kind of removes the impact of cash flows, and like when you deposit money and when you withdraw money. So for people who manage, hedge funds and those type of things, it makes total sense to use time weighted. But for me, I've been using money weighted because that's the actual amount of money that I'm making in my account. But anyway, I did want to show you that my portfolio time-weighted return is actually here now too, and it's at 121. And you can see the S&P 500 in the same time frame is at 80, and the Nasdaq 100 is at 125. So we're still trailing the Nasdaq in time-weighted return, but by a little less than the money-weighted version. All right, so now if we take a look at what I bought and sold for the month, now on October 3rd, I had one buy, and that was Palantir buying 40 shares at $176.22 a share. And again, that was one where people just lose their mind. Like anytime I buy Palantir or I talk about Palantir, people just get crazy and they start talking about valuation. Told you guys a million times, valuation is not something that I focus on. And bottom line is, I think Palantir is going to be much bigger than it is today. That's why I bought it. But after that, I posted on Friday that I decided to trim about 20% or so of my portfolio, and that's what I did. Now, all of these happened on October 31st, and they're all sales. I sold 10 shares of Visa at $342.19 a share. I sold 10 shares of Coinbase at $341.12 a share. I sold 41 shares of Cloudflare at $238.61 a share. I sold 6 shares of Meta at $666.53 a share. I sold 66 shares of Amazon. This is just getting ridiculous in terms of the number of sixes in these numbers, but whatever. 66 shares of Amazon at $249.50 a share. I sold 16 shares of Google at $285.14 a share. I sold 39 shares of Taiwan Semiconductor at $305.92 a share. I sold 55 shares of Snowflake at $272.78 a share. And then lastly, I sold 122 shares of Nvidia at $206.99 a share. So, clearly that's a lot of selling, and I had a bunch of questions about why did I do this? Why did I not trim Palantir out of all of the holdings? And we're going to get into all that. Now, first off, how did I pick what and how much I was going to sell for each one? Now, mostly it was determined by whatever was in that brokerage account, because I wanted to trim from my taxable brokerage because I wanted to use the cash for other things. And I couldn't really do that in a tax advantage account. There's more restrictions there. But anyway, that means that there was a taxable event for this. I've planned for that in my own personal situation. I have some things that can offset the kind of capital gains taxes that I did kind of hit with these actions. But I obviously did the math on each holding, and I was comfortable with what it meant for each position in terms of where it would end up. But I also made a couple transactions outside of that taxable brokerage for ones that I wanted to trim a little bit, but for the most part, it was whatever was in there. Now, second, why was Palantir the only one that I didn't actually touch or change? Now, ultimately, I just added Palantir like a few months back, so I wanted to keep the allocation that I had to it. I basically didn't want to reduce it. And look, Palantir is one of my highest conviction holdings right now, believe it or not. And at this point, it's one of my smaller allocated holdings. So I just didn't want to trim from it because I do believe in it long term. Everyone's going to bring up but it's at 600 PE and all that stuff. I don't know how many times I have to tell you guys, that is not a consideration for me when it comes to this. So I figured trimming across the board, except for that one holding, made sense for what I wanted to do. And then lastly, why I decided to trim at all basically came down to 3 factors. Now, first, look, we just talked about it's been a really good 2 years and where my portfolio has outperformed by a lot. And that in itself isn't really a reason to trim, but it's just, recognizing that we've been on a really great run for the last 2 years. These things don't normally go up in a straight line. And so, that kind of brings me to my next point, which is that the market actually does look a little bit extended here. And what people mean by extended can mean kind of different things. A lot of people will bring up valuation and, the Buffett indicator and all those things. To me, that is not really what I'm focused on, but you can look at things like concentration into the Mag 7. Again, that is not something that I think is a huge deal. I think those are the most profitable companies or the strongest companies in the market. But when you start looking at the chart, you can see that we've been almost straight up for a while since kind of the depths of 2022. And at some point, we're going to start retesting these moving averages. I mean, that's just how these things work. But then lastly, the main driver was I really wanted to book some profit and have some cash in my pocket to do some different things. Now, obviously, there could be an opportunity if the market does take a little bit of a breather to buy back into some holdings or to get some new holdings at some pretty decent prices with some cash on hand. But the other thing I wanted to do was actually put more capital into my active trading account, which I've been doing more and more of recently and really enjoying it. I talked about it a little while back that I'm experimenting with some option trading strategies to learn new ways of generating income, kind of getting returns using capital outside of just buying and holding stocks, especially on holdings that I think may go up, but I don't really want to hold long term. And again, it's been really enjoyable for me to do that lately. And obviously, I had a big win with AMD a few weeks back, but even after that, I've experimented with some basic put spreads, and it's something that I want to continue doing with a little bit more capital in my trading account. And I know there might be some out there that are like, why are you doing this? This is riskier behavior. You're a trader, not an investor, all the things that people like to say. But you have to remember, what I share on this channel is my actively managed part of my portfolio, right? Like we still have other accounts that I don't really talk about that just have the S&P 500 index in it, like my wife's retirement account. So this isn't our only investment account or investment portfolio. And ultimately, what I want to have is as many tools in my tool belt as possible to be able to understand and kind of navigate markets. Because again, my portfolio has had a really good last 2 years and a pretty good last 3 years. So it's easy to look really smart when the market's going up, right? And ultimately, what I want to understand is option strategies that can help me deal with overall markets when maybe they're not just going up, maybe they're trending down, or maybe they're just trending flat for a period of time. And I want to be able to generate income. I want to be able to generate return in all kinds of markets. So you need different skills and tools to kind of do that, because we don't really know when or if that's going to happen. So a lot of what I'm doing is simply trying to learn, preparing for when things aren't as easy in the market as a risk mitigation strategy. And I started with about 50K in that trading account, which is now around 65K or so. And I wanted to add another 50K to it to give me some additional capital to work with. Now, in terms of how that's going to affect these videos, I'm not really sure yet. I want to incorporate it somehow, like maybe the cash account, that we can see how it's growing over time, because in Snowball Analytics, I can't put options holdings in there. So I'm going to experiment with that a little bit, and we'll kind of see over the next few months kind of what that looks like. And maybe I'll start doing sections where I talk about interesting trades or things that I learned kind of along the way every month in these videos. But look, at the end of the day, I wanted to book some profit. I wanted to be able to put that cash in some other places. And I'm not saying that you should do this. If you're just investing long-term, buy and hold for retirement, the best thing you can do is just continue adding to that account, continue, acquiring assets and doing that. What I'm doing is something that I enjoy doing, that I want to do. And yeah, I'm not saying it's the right thing for you. So with that said, let's get back to my long-term portfolio and take a look at my updated portfolio weightings. Now, cash right now is obviously in the top spot at 20.36%. But again, a good chunk of that's going to be moved to my trading account. Now, in terms of my actual holdings, though, NVIDIA is still in the top spot at 12.94%. Amazon is next at 12.21%. Taiwan Semi is still third at 9.6%. Cloudflare is at 8.74%. And Meta is fifth at 7.59%. Coinbase is at 6.14%. Visa is at 6.08%. And so is Google at the exact same percentage, which is just kind of weird. Now, Palantir is at 5.57%, and then Snowflake is now my lowest allocated holding at 4.69%. Now, if we take a look at what holdings performed the best over the last month, Snowflake was the best performer of the month, up 21.87%. Cloudflare was next at over 18%. Google continued its climb over 15% for the month. Amazon was up over 11%. Palantir up just under 11%. NVIDIA up over 8.5%. Taiwan Semi up over 7.5%. And Coinbase was up just under 2%. And then for my two negative holdings for the month, Visa was just negative for the month, basically flat. And Meta, obviously the big loser for the month after earnings, down almost 12%. Now, if we take a look at what holdings that performed the best overall, and remember, this is just price return since I take my dividends in cash to reinvest manually, Cloudflare is still in the top spot and at 145%. And just realize that some of these numbers are a little bit higher this month because I sold items that were in that taxable brokerage, which were like newer buys at a higher cost basis. So that skews the overall gains number. But I mean, basically the dollar gains and the overall performance is the same. NVIDIA is just under 135% in gains. Google is up over 85%. Taiwan Semi up over 57.5%. Snowflake shot up to over 47%. Coinbase up above 44%. Amazon had a nice resurgence, now up over 40% as well. Visa up just over 39%. Palantir now up over 32%. And lastly, Meta, after the big drop, now up just 30%. And when you look at some of that performance, I mean, even my worst holdings right now are up over 30%, right? So I'm curious to see kind of how this market goes. It's one of those things where it just kind of challenges your own kind of brain and your thinking as to what's possible, right? Like, can things really just continue going up like this? It's natural to kind of doubt that and say no, but then it's like, okay, well, what are the catalysts that are going to be able to do that? It's going to be interesting to see how it plays out. Now, if we take a look at my investment income, specifically for the next 12 months, we see that my annual dividends and interest are at $1,007 and some change, which is down from the $1,160 I had in September, but clearly that's because I trimmed all across the board. Now, in terms of overall dividend yield for my portfolio, it's at 0.25%. Now, for the actual dividends that I received this month, on October 2nd, I got $4.44 from NVIDIA. And October 9th, I got $164.39 from Taiwan Semiconductor, for a total of $168.83 in dividend income for the month. All right, so let's take a look ahead to next month and what holdings I think I'm going to be adding to going forward. Now, in terms of my current allocation, the only one that I want a higher allocation to right now is still Palantir, which hasn't changed over the past few months or so. And obviously, because I did add it this month all the way at $176 a share, so if it's one of those things where after earnings it dips a little bit, earnings are actually today after close, we'll just see what happens. I'll probably be adding more. But other than that, I may actually add to my Meta position if it keeps dropping for a while, and we'll just have to see. Now, in terms of ones I think are good value right now, I think the obvious ones are Taiwan Semiconductor and Meta, with an honorable mention still to Nvidia, believe it or not, but it has come up quite a bit. Now, like I said, I'm curious to see how these next couple months go in the market, both kind of into, end of year and then how we start into next year, just because, it has been on a great run, and it's one of those things where you just kind of wonder if that's going to continue or how it's going to continue. But expect to see some stuff related to my trading account, trading activity going forward in this video. I don't really know how I'm going to incorporate it yet, but I don't really feel like it should be in a different video because I would like to judge my performance kind of all together, but we'll just kind of see how it goes. All right, so lastly, if I recap what happened this month, portfolio was up over 8% and outpaced the S&P 500 and the Nasdaq by quite a bit. We're still crushing the S&P and Nasdaq year to date, and the S&P since inception. And then lastly, I trimmed about 20% of my portfolio to cash, booking some profit, and we'll just see what comes next. So how'd you guys do for October? Let me know down in the comments. Now, if you want to see my take on recent earnings related to Meta, Google, Fiserv, and more, you can do that by watching this video right here. Hope you guys have a great day out there. Financial independence is true freedom, so keep building and stacking wins, and I'll see you on the next one. Peace.